Today I want to take some time and talk to you about the prices of oil in particular. The last video we did was actually in the beginning of June, where a client asked to review the stock market, and we actually did a video at that point saying that there was a bit of a quiet before the storm, and it appears that the storm is here and the stock market is down from June, and that's pretty important. So today there is another situation, but this one is not in the stock market, but it's in the commodity of oil. So the crude prices of oil are pretty low at the moment. They're hovering around $45 to $50 at the moment. And everybody's falling asleep at the wheel because we're now accustomed to lower oil prices, and it all seems to be where it belongs because there's an economic slowdown, there's more supply than there is demand at the moment, storage is full, and all of these things and more. And as a matter of fact, if you look at the media and some of the bigger financial firms that are making predictions, a lot of them are actually insinuating that the oil prices could go even lower to perhaps $20 a barrel, and who knows, it might very well be. However, yesterday I got a call from a client, an oil company, that wanted to have my observations on the crude prices. And I did some research, and this is why I'm here in front of the camera just sharing my observations with you. And I think there's a very strong possibility that oil prices are not going to stay where they are, and also not going to go down to 20, but rather I see a hike in oil prices. And there's a number of reasons that I think that is likely to happen. And it is predominantly technical, to be honest. You can see there's a relative low number of settlements in forward contracts, which means that there is or my interpretation of that data is that there is not enough need for companies to do hedging at the lower prices that we currently see. Everybody's kind of happy where it is. Like oil prices are low, so oil companies don't want to sell on forward contracts per se, and say airlines or other companies that are buying the oil are not in a rush to buy because we all know it's going to go down to 20, right? So you can see that the forward future markets are quite dull at the moment, which also means that there's a low open interest, and this is a bit of a time bomb. And as you all know, I have a commodity trading background. So that is something to be very aware of. So what I can see unfolding here in the next couple of weeks, we're not talking years or months, is a price hike from where we are today, which is about $48 US, to say 60 or 62. Probably a retreat at that point, because now at that point everybody wants to lock in the higher prices, right? It's at that point 20% higher if this scenario comes to pass. But at that point there is a technical breakout, and I think we're going to go higher if that is going to be the case, and higher towards $80 to $85 a barrel. And this could actually happen in say 14 to 18 weeks. So that could be by the time January rolls around, we could actually see $80 oil. And there's a couple things that may need to happen before we can actually see that, but that's always the case. So I'm here to share with you what I said to the client, which is if there is a moment where you think you need to take your positions for higher crude prices, this is the time to do it. And there's obviously a lot of unrest in Syria, in the Middle East, that could come into play on a macroeconomic level. For instance, I think there is a lot of production that can't be sustainable or economic at today's prices. As a matter of fact, my client is one of those companies that is producing oil and is having a very, very tough time making their production economic at $45 per barrel. So that's my short message for today. I see a very strong case, both technically and fundamentally, for higher oil prices. Today we're at 48. I'm calculating an estimate of 60, 62 within 3 to 4 weeks. A short pullback to perhaps the 50 or 52 level at that point, and then onwards and upwards to $80 to $85. So I'm advising clients, or at least sharing with clients, the possibility of this scenario, and perhaps taking action on their hedge positions or production positions. Thank you.